turn it over to our good friends here to tell us how we're doing.
Thank you. Happy to be here, and I mean that not just for this morning, but we're very pleased with our re-uppance as your advisor, and we started 5 years ago. We've got a 5-year report for you today to look at that, and so it's been the last 12 months. We'll focus on that first. It's been a very good year for investors, in particular the stock market. If there's anything that the historians of the capital markets will focus on at this time, it's really going to be more about the bond market and how bad that has been. Been really a 3-year bear market for bonds, and that if you look back over the cumulative 5-year period that we've been working for you, the bond market has basically been flat, and we really have wouldn't have expected that 5 years ago. And since I'm on the subject, I'll stay with it. I think that the caveat here as investors is to not look at short-term past performance and extrapolate that forward. That would be a big mistake, because the future return for bonds is actually likely to be quite more favorable for investors than what we've seen in the recent past. And that's because now we have bonds that are yielding returns that are above the rate of inflation, where 5 years ago we were actually in a negative real return environment for bonds, meaning that the yield in bonds was below the rate of inflation. So this is all this is on a forward-looking basis. That aspect of the capital markets looks quite favorable. The stock market, everybody wants to know what we think the stock market's going to do, next month or next year or whatever. Nobody knows. First of all, let's start with that. But the second thing is that I think it really depends on what parts of the market you're looking at, because we certainly have, as we've talked about the last several quarters, we have parts of the market that are very expensive. And those are the parts of the market that have been generating the best performance, and specifically in the technology sector, and even more specifically, U.S.-based large technology companies. And so, the nickname that we didn't make up, of course, but the nickname that's being used for those companies is the Magnificent Seven. And these are companies that have just exploded in terms of valuations and pricing, but they've exploded because they've been delivering the goods. They've been able to generate very high levels of profitability. NVIDIA, as an example, is really an off-the-charts company as it relates to efficiencies and net margins. Their net margins, net after taxes, net after cost of goods sold, net after overhead, everything, are around 75-80%. I'm sorry, 65-70% of their gross. These are incredible numbers. So when we talk about that, though, the risk is that a company like NVIDIA, if you're in that space in any way, if you're in the chip manufacturing space, and you have the technology to work your way over into the AI side of things, you're going to do that, because you're looking at those margins and saying, oh, we need to get us a little sliver of that marketplace, and we're going to start minting money as well. So what you'll see is just the natural marketplace is going to create higher levels of competition for NVIDIA, and we're seeing it with Apple. You may have seen the most recent data on Apple. Their iPhone sales are down quite a bit in China in particular. And so you'll see competitors nibble away at the margins, both profit margins as well as their market margins over the next few years. So does that mean that part of the market's not going to do well this year? We certainly don't know that. But in the other parts of the market, when you move away, in particular from that specific part of the market, again, we're talking 7 companies out of thousands that are publicly traded. There are really great valuations out there. There are a lot of companies out there that are trading at very attractive prices relative to their structure and their balance sheet, their wealth, their asset liability positioning, and at very low prices relative to their earnings and their free cash flow. And so we do think that it could be, particularly if interest rates are stable and start to decline later in the year, I think it could be a pretty solid year for equities. Probably the big issues that throw a wrench in the work, and Bob and I were just talking about this a little while ago. The tariff issue that's being discussed in Washington, could be problematic. in a couple of ways. First of all, it raises the price of goods for everybody, so that's inflationary, and that can have an impact on slowing down economic activity. But also, as it relates to corporate profitability, because what happens is that generally corporations, in order to make up for the tariff, because there's going to be we put a tariff on Mexico. Mexico puts a tariff of some kind on our goods, and we're exporting to them. So that means that in order to protect your market share, if you're exporting goods to Mexico, you need to cut your prices to keep the price stable in Mexico. That means less profitability. So, and there's a whole series of other, heinous reactions that the marketplace can have from that tariff discussion. So before we lose any sleep over that, though, keep in mind that in President Trump's first term, he used tariffs effectively as a bargaining tool to get concessions with our trading partners. And that's what is very likely could happen this time as well. Because I like to think that there's the thinking in the administration is sound to recognize the negative economic ramifications of higher taxes, and that's all a tariff is a higher tax. So with that preamble now in the rearview mirror, let's just you've been through these reports, so I'm not going to go through them in a lot of detail. All three pension plans, as you know, have the same asset allocation. That's been the right asset allocation. It's worked nicely for you. But it's basically 2/3 in stocks and 1/3 in bonds. And the bonds are in two different flavors, kind of traditional fixed income, and as well as treasury inflation protected securities. And then on the equity side, we're 70% domestic, 30% in international. And we're broadly diversified in both of those categories. In fact, the whole portfolio is broadly diversified. It's a key thing when we talk for what we're trying to do here. So what are we trying to do here? We're trying to make sure that we've got ample assets to pay out the plan participants upon their retirement, and that we have that obligation to pay them out forever, for as long as they're alive. And so this is very long-tailed liability. So when we have a long-term liability, we want to fund it with assets that are going to generate higher returns over the long term. And so that's why we're more skewed towards stocks than bonds. And so we have the luxury of time, and we don't have to make 7% return in a portfolio every year. We need to average 7% return over a longer time period. That's in order to meet our actuarial return expectations. So let's just jump ahead to page 5, and we'll look at the quarter. So the fourth quarter was down, and it was really down on that on a couple of things. So right now, good news is bad news in the market, right? When you may have noted that. you see this positive economic need. Consumer confidence is up, spending is up, GDP is growing, right? Okay, so the market right now, perversely, doesn't really want to see that. What the market is fixated right now is interest rates and Federal Reserve policy. They want interest rates to go down. But the market doesn't want to see us go into a recession. Let's be clear about that. That we don't want really bad news. We just don't want news that's overly rosy. So that we're trying to get to a point where we're having nice economic growth, but not extraordinarily high economic growth, which will allow the Federal Reserve to look at inflation rates, and if we're not growing as fast, inflation shouldn't be going up as quickly. And that allows the Fed to cut their Fed funds rates. And that's the stock market is interested. Stock investors care about two things: corporate earnings and interest rates. And all the other stuff is noise. Yes, there's some geopolitical event, the market will react to it. Yes, OPEC does something with oil, the market's going to react to it. But what it really cares about long term is the valuation of businesses. How do we value businesses? And companies are worth what they're going to be, what their asset value is today. That's an obvious thing. But also, what is the value that they're going to be able to generate for shareholders in the future? And so the market is discounting, looking at those future cash flows, those profit, and saying, what's that worth today in today's dollars? So that's the net present value of that business. And so when interest rates drop, you're discounting those future cash flows by a lower interest rate. Therefore, those future cash flows are worth more today. Think about inflation, right? If inflation's higher, a dollar 10 years from now is not going to be as if inflation is at 5%, not going to be worth as much if inflation is at 2%. It's the same thing. So that's what investors are looking at. So the valuations for businesses and when we talk about how I started about before, there are parts of the market that have very, very high levels of valuation today, and so things have to go perfectly for them. Some of those technology companies that I referenced. There are other parts of the market that are actually quite inexpensive that are trading at lower levels of valuation. So back to the fourth quarter, what happened? Investors got a little spooked because they saw some very favorable good news, and the Federal Reserve backed off of their rhetoric of cutting interest rates more aggressively in calendar year 2025. That was one factor. And then the other factor was the tariff discussion and the impact that could have on inflation as well, which kind of exacerbates that first thought, that prices could be higher for longer, and that means interest rates are going to be higher for longer. So that's kind of the bad news. We don't have to show you negative numbers, of course, but 1.3% over a quarter is, we're managing money for 50 years here. We have to expect those types of things. You've already made that back and then some so far in January. So if it makes you feel better, you're up about 2.3% as a close of yesterday through January. Let's look at the year and let's look at the longer term data. For the last year, 2024 was a very solid year. So if we're looking at, on page 5, we're looking at the non-salaried DB plan and you can see the gain, the investment gain just above the green line in the middle of the page, $3,942,000. So it was a very good year, almost an 11% return, right? Who would sign up for that for this year, right? I wouldn't do that. It would be great. What's more important really is looking at the 5-year number. We got a 7% bogey, and the return was 7.58%. We mentioned this last quarter, made 7.58% in a 5-year period where there were 2 bear markets. Think about that. And let's go to the next slide here. If you look at page 6, look at the far right-hand column, since inception annualized. So the gray shaded lines represent how your portfolio did. You can see for the equities, your equities averaged 10.37% per year over that 5-year period, with tremendous amounts of volatility. And fortunately, in good volatility as well as bad, that allows you to get the positive return. But the real story here, as I mentioned initially, is that second line down, the fixed income number, negative 0.2%, 0.21%. So bonds were actually, on a total return basis, were actually slightly negative over the last 5 years. That's a rarity. It just doesn't happen in the bond market. So, and of course, if you adjust for inflation, if you go down to the very bottom line where it says total portfolio, and then you go just above that, you'll see the CPI, the Consumer Price Index, 4.2%. So bonds actually lost in purchasing power about 4.5% per year over the last 5 years. Okay, none of us in this room are very likely to ever see that again in our lifetimes. It's such a dramatic low return for bonds. And the other thing too is that, let's say interest rates went up every bit as much over the next 12 months as they did in 2022. You would have nowhere near the decline in the value of bonds because you're starting at with a higher yield. We talked about this before in 2022 when the Fed funds rate went from 0.25% to 0.5%. You say, gee, that's only 0.25%. What does that matter? Well, it's a 100% increase. You doubled the interest rate, right? And so in 2022, there was a 19-fold increase in the Fed funds rates. 19-fold from the beginning. That's why the bond market got hit so hard. So we're not going to see a 19-fold increase in this country. If we do, it's going to be we're the next banana republic, right? We're not here. Our currency will be absolutely totally debased, and we got bigger worries. So let's take a look at just I don't want to short shrift anybody, but if we look at page 14 and we look at the salary plan. Well, let me pause, see if there's any questions.
I think our biggest fiduciary responsibility is make sure that the fund lives on. It has to maintain and for the future. And I think that's always our biggest worry, where when we had the recession, I remember I asked for the actuaries to take a peek a little bit at this because we have obligations. But that's, that return this past year for this type of investment, 10-11%, that's awesome.
No, thank you, yeah.
Because we really, I would more expect somewhere around 6 to 7, maybe 6, more like 6. But I think our obligation always is the future, and that's why we have you come in so many times a year. Because we gotta make sure we're on top of that, because we have that obligation to our employees.
Yeah, well, thank you for the comment, and also, I couldn't agree with you more. I mean, this is a big deal. The fiduciary liability that you have, that we have, we're named fiduciary to these plans as well. It's important that you realize that. And so that, from our perspective, from an investment, when we're looking at investments, we need to do everything as you do in the exclusive best interest of the plan participants.
We're talking, folks, $90 to $100 million. That's in that range of what we're talking about here. That's, significant.
It is.
One question I have.
Sure.
Since the president signed all these executive orders, is there anything going to affect the stock market?
So, I don't know the answer to that yet. So, because if you take, I forgot what they call it, but, not being born in the United States, the judge has already, postponed that ruling. So these executive orders, many of them are going to be challenged in courts. And so the market's going to look at some of them and say, okay, they'll have some kind of an assessment as to what is likely to be able to survive from a court challenge and what's less likely, and that'll be reflected. So I guess the answer is some of it, he signed like, 150 of them or something like that. So some of them will certainly have already been reflected because that's happened. And then some are, the jury's out, both literally and figuratively. So.
Does that sway the international market at all?
Pardon?
Does any of that sway, not the executive orders, but the international market, as far as the oil and being this country and the tariffs that, the international investment funds, is that going to sway that?
It will. The tariffs are going to be probably the biggest thing, but the Trump administration has announced they're petitioning OPEC to cut oil prices. They're going to get their tentacles out there around the whole planet. Trump has indicated he wants to go see Xi Jinping in person. Trip to China. That's going to be all kinds of conversations are going to be happening over there. It's going to be. They're going to be talking about the Ukraine war. They're going to be talking about imports and exports of goods. So yeah, we're going to. This is not unlike President Trump's first term. We're going to have a lot of issues emanating from the White House that are going to be affecting the markets. Some will play out favorably. Some will be less favorable. Mm-hmm. I'll tell you this: if there's ever been an argument for maintaining a diversified portfolio, we're in it right now, right? Because trying to figure out who's going to win and who's going to lose is, I'm glad we're not picking individual stocks. I'll tell you that, right? That'd be tough. Okay. So, on page 14, you look at the profile of the results, the rates of return, virtually identical from what we saw in the first plan. An investment gain for the year of almost $4 million, $3.9 million, 10.85%. And then in tab C, page 23, look at the Utica plan, 10.8% return, investment gain of 1.2 million. That's on a smaller base. So how am I doing for time, Dick?
You're okay.
Okay, so let's just look at, what happens is Yeah, Nick had mentioned that we meet frequently, which is great. I think that's a good thing. What happens is the markets can move sometimes in a more glacial way, and not particularly quick adjustments. So you will note that some of the things like today that we're talking about were things we were talking about 3 months ago. It's not that we don't want to make it more interesting, but these are still the big issues that we're looking at. So the good news is you only have to hear this once every 3 months. I have to say this 3 times a day. Okay, so look at page 29, and this is what I was talking about that left-hand column, the left-hand bar shows the S&P 500, and it goes all the way up. You can see it's up over 25% for the full year 2024. You can see that the solid green bar represents how 493 stocks in the S&P 500 performed, right? And then this part up here represents how just 7 stocks performed. 7 gigantic companies, the Magnificent Seven. And so those 7 companies, they made up more than half of the total return of the 25% return for the S&P 500. What's good, though you own those. We own the S&P 500, they're in your portfolio. That really helped the performance last year. But you can see we don't want to chase yesterday's winners, because if you look at well, first of all, if you look at the other parts of the market, they were all pretty solid as well. And even the the international parts, the developed markets and the emerging markets on a local currency basis had results very similar to the US stock market. But the plan did not get all of that because the dollar strengthened, and so when you convert the foreign returns to dollars with the strengthening dollar, the returns to US investors are lower. The opposite of that is also true when the dollar weakens. So the whole idea of owning international as a diversification effort and recognizing that there's a lot of really good companies that aren't headquartered in the United States, right? A lot of really good companies. We want to own them, but we realize that currency is going to have a favorable and unfavorable impact in the short run for the plan. On page 30, the top bullet there is really the issue du jour, and that is that 37% of the S&P 500's value is represented by 7 of the 500 companies. So there we talk about is how important it is to be diversified, and recognizing that those 7 companies are all doing so well because they're in the artificial intelligence space in one way or another. That's a poster child example of concentrated risk. And so we want to make sure that we don't get over invested in that part of the market. We want to make sure that we're distributing assets in your portfolio in parts of the market that are cheaper. At page 31, the left-hand part here, this is like a bit of a heat map. Think of it that way, that the top higher, more expensive parts of the market, we show what those asset classes are: US large, emerging market large, and then you can see the other parts of the market, how much lower their price relative to their 15-year averages. And then on page 32, I've got just a couple more slides, but on page 32, you look at these are the last 6 calendar quarters of performance. We look at the major equity asset classes in your portfolio. So this is the reason I'm pointing this out, is we're starting to see perhaps the beginning part of a breakdown in the leadership of the market. So it's not just large cap US every single quarter. Over the last 6 quarters, you can see in the third quarter of 2023, emerging markets, now this was a down quarter, negative quarter, but emerging markets was the best performing. And the emerging markets was the best performing in the second quarter of 2024. Small cap domestic was the best performing in 23, or fourth quarter 23, and the third quarter of 24. And then large cap, which is, which we've been discussing, has been performing very well. They had 2 of the 6 quarters where they were leading it as well. But it wasn't just one asset class. So that things are moving around a little bit, and investors are starting to discover the other flavors that are out there for for their portfolios. All right, and then just page 37, boring but important. We look at the yield curve. And so we talked about earnings and interest rates and all that, and the focus that the Fed has on inflation and how that's gonna impact their adjustments. When we look at that yield curve, there's a couple things that all three of these lines that are on there for a reason. The solid green line is where we are at the end of the year, okay, so that's we wanna look at that. And you'll note that it's really quite flat, but it's somewhat positively sloped, meaning that long-term yields are slightly higher than very short-term yields, okay? So, but there's two, looking at the other two lines are important as well. Is if we look at where we were at 12/31/23, so just 1 year earlier, how decidedly different things looked. That's that gray line, dotted line, and you can see we were significantly inverted, meaning short-term rates much higher than longer-term rates. And then the story of the day, which is 3 years of the 5 years that I was talking about before, is looking at the 12/31/21 line, the bottom line. That's where we were 3 years ago, and you know, and what happened? I mean, my goodness, it's a seismic change that we're looking at. Interest rates have moved up so much in such a short period of time. And that has been really what's been having the greatest impact on pricing in the capital markets. Certainly bonds directly affected by that, but also not as directly, but also very much affected, of course, is equity prices.
So how about a comment on the interest rates going forward? What are you hearing out there?
And for short-term rates?
Yeah.
Yeah, short-term rates, you know, it's hard to argue with the consensus, just because that's what creates the yield curve, that's the consensus thinking. And so if you look at that green line there, that would suggest that there's going to be over the next few, thank you for zooming in on that. That would suggest over the next year or so, we're going to see a decline in rates, meaning that there's going to be lower levels of inflation. So in a year out, we're going to be looking at short-term rates that are.
What do you think long-term for mortgages and things like that?
I think they're going to follow suit with the short end of the curve. That's usually what happens.
Like
You know, that
3 or
is-
6 months.
Yeah, I mean, so what the bankers, the reason that is the bankers are looking at their margins, and they're looking at the spread between their cost of borrowing, which is deposits, which is what they have to pay at the short end of the curve. And then when that cost of capital drops, it goes from 4% down to 2%. If they cut mortgages from 7% to 5%, their profit margins stay the same.
So, you know, the one thing I always worry about, well, I think a lot of us were blessed around the table or over here in the seats that we were spoiled with that high 2-3% mortgages.
Yeah.
And then what I feel for is then it went to 7, but then if we talk to our parents back in the 80s, they were over 10%. So they said we would love to have 6 or 7. But
Nick, I don't think I'm old enough to be your father.
No.
I hope, maybe I am, I don't know.
That's not the point I'm making, but the point I'm making is, so, you know, if I talk to my parents, they're like, okay, 7%, 6% is very attractive compared to where they came from. We were spoiled. Okay, we got used to this be forever, but now what I feel for is the younger generation, because the house, I don't go off, but I still have to say it, houses are overpriced, interest rates are high. I just feel, it's a tougher road for them right now.
Yeah, my first mortgage in 1981 was 15 5/8%. 15 5/8.
Yeah.
Wow.
Yep. So that was the bad news. The good news is, when the rates dropped precipitously, housing prices skyrocketed. So yeah, you're shelling it out every month to pay the mortgage. But once interest rates started to drop, the asset value increased, and and it's leveraged, right? Because you've got 80% of the values mortgage, and so you know, not that I knew any of that was gonna happen, it was dumb luck, but you know, it did ultimately work out, but, you know, so there'll be that as well. The big issue right now in housing is not interest rates, it's supply, there's nobody selling. And that is, there's a whole series of factors influencing that behavior.
Right.
The other difference for people buying a home, when you bought your home paying at 15%, you could deduct that off your federal income tax along with the state and local tax. So your effective cost of capital was maybe 8.
Yep.
Now the kid is paying 7, and he can't deduct it. And he can't deduct the property, he's limited on the deduction.
We gotta move on here. This is painful.
All right, listen, any other questions?
Painful.
All right, thank you for your presentation.
All right, thank you. Good to see
Very,
everybody.
very good, very good
Thank
presentation.
you.
Okay, we'll stay, Neil, we'll stay with the 10% return conversation, okay?
Painful, huh?
Okay, folks, we're gonna go right into, audit and finance here. Just get my notes here, I gotta put red glasses on too. Okay. Okay, Melissa, let's go over our third quarter results.
I think we're gonna start with John.
Oh, John, I see, I'm sorry, John, I didn't see you.
Well, that's okay.
All right, John, come on up, let's talk about tonight's insurance.
Okey-dokey.
You look around.
Good morning, everybody.
Rick, we're gonna talk about the Central overnight of the Hub liability insurance.
Right.
Do you want me to take that? No, you'll be a mess now. For you, while you're talking?
Okay. We have 2 hubs, one in Utica, one in Rome. And for these 2 hubs, we do buy first dollar liability coverage to satisfy our leases. We have $1 million, $2 million for bodily injury and property damage liability, and our excess liability does go over this. Last year's cost was about $54,730, and this year's deposit premium is estimated to be $60,501. We still have to provide the carrier with a couple of items, but I don't think that it's gonna make any difference in the pricing.
John,
Yeah.
since we got you here, okay, talk to us a little bit now, okay, before we talked about, you know, Florida with the problems down there with the storms, now we got the West Coast. So what's the talk out there in your business about the impact all over the place?
All over the place, the impact is gonna be very significant. You all see it in your homeowners and auto policy. I mean, you look at TV and the devastation in California is just like unbelievable. I don't know what these people are gonna do. And you're talking about a state in which most of your major insurance carriers, both California and Florida, have quit. And both Florida's and California's solvency pools are just about drained. So I think for us, the insurance effect is going to be significant because it's all the reinsurers that are boosting the prices, and our coverage is with the reinsurers. So if you're asking me to predict, I can't. I can only tell you, I think come May, we're going to be paying more money than we're paying now. How much, I have no idea.
Does it matter, like, whether you live in a flood zone or California where there may be fires? Does it matter
It's not,
where you live in the country as far as your
well,
pricing?
if you read the newspaper articles, for whatever reasons, our personal automobile premiums are higher than most.
Trust me, I had to pay mine.
Yeah, well, mine went up 35%.
Yeah.
I own
Yeah.
the Travelers.
I thought it was a mistake.
So The effect is basically the reinsurers. They're going, every company buys insurance, whether they buy it over 500,000 or $1 million in both property and liability claims. They'll pay the claims, but then they'll put in their own claim to the reinsurers. And it's really from the reinsurance companies that the money is coming from. So that's going to affect everything across the board. Business insurance, personal insurance, it's all going to go up.
So it doesn't matter if this is in a flood zone, now you live in the house.
Sadly, most people don't buy flood insurance. You don't have to unless you have a mortgage, really. So a lot of people elect not to. What is kind of upsetting, if you think about it, these people that don't are getting bailed out with our tax dollars. And that's hard. It's really hard. So the marketplace is kind of crazy.
And the competition will lessen now because of the people getting out of the business.
Absolutely. Okay. I mean, if you're in Florida, for example, or if you're in California, and you may have your insurance, well, you used to have your insurance with State Farm, but it's not the State Farm that we all know. It's State Farm of something. It's a pup company that once the claims go through, they can file bankruptcy and just leave. It's a significant problem. They have, Florida they didn't pull my license, but no company will let me write a homeowner's policy in Florida anymore. California has not pulled my license, but I can't write homeowners or business insurance in California anymore. And those accounts that I might have out there, they've been grandfathered, but for how long, I don't know. And that's gonna happen all over. I mean, I have no great love for these insurance companies, but I can't get my arms around the billions of dollars that are flowing out.
It's tough.
Okay, any other questions for
I
John?
wish it was better news.
Okay, Julius.
Was that also with the hurricane that was in North Carolina?
Yeah.
Does that apply to that also?
Oh, yeah, absolutely. Any major catastrophic loss, these dollar amounts of money are going to affect our costs with the name of the insurance company that we buy our stuff from. Good.
Thanks, John, for the news. We love it. Have a motion for the insurance. Robert, second. Darlene, any discussion? All in favor? Aye. Moving on. Melissa with their numbers.
Yes. Quarter end, so we have both the balance sheet and the P&L. So as of December 31st, 2024, our quick ratio on our balance sheet is 8.03. This is an improvement compared to last December, which was 7.01. This indicates that the authority has about $8 for every $1 of incurrent assets for every $1 in current liabilities. As you can see, our current assets total approximately $58.7 million. This is an increase of $1.4 million. And our current liabilities are right around $6 million, and this is a slight decrease of $559,000 compared to last December. More specifically, our current assets, cash equivalents, and investments total $36.8 million. This is a slight decrease of $84,000. And that's just really cash flow. We're paying for our buses. You can see that our receivable balances have increased and is at roughly about $12.6 million. These receivables are all collectible, with most of them being the grant receivables, and that's primarily due to the bus purchase. Materials and supplies are $3.8 million. This is a slight decrease of $343,000 compared to last December. And prepaids and other current assets are $5.4 million, and this is a slight increase of $146,000. In our prepaid account, those are a lot of our insurances that we pay up front. So the cost of insurance goes up, that MPA liability goes up. Any questions on our assets? Our current liabilities, accounts payable and accruals are 2.5 million, which is in line or a slight increase of 87,000 compared to last December. This is pretty in line with the normal life cycle of business transactions. Our accounts payable, accounts payables are all remitted within 30 days and are all current. Current accrued salaries, liabilities, and benefits are 1.9 million, an increase of 193,000 compared to December 2023. And this is largely due to we have higher balances of vacation and sick leave. So that's what that liability is. And then estimated claims payable, this is adjusted out only once a year at the end of the fiscal year, and that's 848,000. The increase is 876,000, which is the adjustment to our IBNR for UMR, which is our incurred but not reported liability for health insurance. Any questions in regards to our liabilities? It's a lot of the same story. We're at the time of the year that the story's about the same. So moving on to our revenues and expenditures, after 9 months ending December 31st, the operating income before capital contributions and non-operating expenses is 6.5 million. With operating revenues performing at 3% over budget, 6% over prior year, and 15% over fiscal year 2023. So the increases in our passenger revenue are attributed to both increases of pass sales and our ridership continues to trend in a favorable upward trajectory, and then also increases in our contracted revenues and the guaranteed minimum in our advertising contracts. In regards to expenses, our personnel expenses are 10% under budget and 8% over prior year. Our non-personnel expenses are 8% under budget and 7% over prior year. These trends continue to be the same in regards to our personnel expenses. Again, we budget pretty conservatively with all staff or all positions being fully staffed for the entirety of the year. We've reported, consistently that we're still looking for drivers and maintenance workers. So that's attributing to that personnel variance, as well as pension is the only one that's trending over budget, and that is the change that we made to the new contract with increases to the 401k match, and then also our annual actuarial assumptions also affect that line. Any questions in regards to the personnel expenses? Non-personnel expenses, these categories are generally either in line with budget or operating under budget, but over prior year. So we anticipated the expenses to go up, but they haven't gone up quite as much as we originally anticipated. Risk management is under budget and prior year, and that's due to claims. So that was a big. And then fuel is under prior year, and that's due to the locking of our CNG rate.
So, quick question.
Yeah.
So John, when we take over the Cortland facility, this sounds stupid. Do we get a discount because we have more properties in now that need insurance, or it's just gonna keep going up and remain the same?
It's gonna just go at the same rate that we have for property, which is through the factory mutuals. The liability will catch up afterwards. I mean, during this particular policy year, we start tomorrow, it's not gonna cost us any more money. But when we renew the contract, provide them the number of operating buses and locations and so forth, that'll factor into the premium somewhat.
Would it matter that So Syracuse is an urban, a little more of an urban area. I would think higher risk of incident, accident versus Oneida or Cortland is lower. Does that factor into it?
That's factor. They do look at the county's population and so forth. So when they build their rate, they will get an overall rate, but going into that rate, Cortland or Rome or Oneida goes in at a little lesser premium than Syracuse because it's a lesser exposure.
Any other questions? So expenses on a consolidated basis, overall, expenses are 10% under budget, 8% over prior year, and 15% over fiscal year 23. Our non-operating revenues, these are performing in line with budget, 9% over prior year, and 13% over fiscal year 23. The biggest variance here is in our operating assistance where we are performing largely over budget or over prior year, and that's the increase to STOA. So you'll see that 4.2 million, that's directly related to that. Mortgage recording tax is performing better than we anticipated and better than prior year. This is one that is, you take the dart and you shoot it and you hope you land on a favorable place with those receipts. Gain and losses on disposals, that's attributed to our bus sales, and then investments. Our investments are right around 4%, and we'll see that slide in just a moment. So again, mortgage recording tax, it's performing better than budget and better than prior year. Receipts for December, you see in that one box there, are even better than prior year's December. So we're going in a favorable direction, and that is interest rates and lesser demand. Lack of supply. Here is our first investment report. Currently, we have 9 million in unrestricted operating, and then a total of 4.3 in uninvested or designated reserves, totaling 13.8 million in uninvested cash. In regards to investments, we have 3 of our designated reserves invested in treasury bills with a yield rate above 4%. Currently, we have 14.4 million invested in that maturity, so we're still seeing a good gain. Any questions in regards to the investments? So in December, our cash flow, we received 1.6 million in operating revenue. We utilized 5.8 million of cash to fund operations. And additionally, we received 12.8 million of capital reimbursements from federal and state sources. And we expended 15.4 million on capital purchase, which is largely the bus purchase. So reserve currently totals $18.8 million. We still continue to have a healthy cash position. Any questions?
So we just make sure, are we going into reserve and then bringing reserve into balance right at this point?
Nope, we are still just using operating funds to fund operations.
Good.
Questions that concludes the presentation.
Any questions from Melissa? I have a motion. Tina, second. Luella, any discussion? All in favor? Aye. Okay, Carol, I'm gonna make room for you because you got a lot on the agenda, okay? Kara's got a lot to talk about here with multiple resolutions for grant applications for money. So let's talk about first resolution 3A.
Mr. Chairman, with your permission, if I can condense resolutions A through E.
Well,
And I did tell her that would be okay.
That way we don't have to say the same speech
That's
over and
great,
over.
that's great. Okay. Yeah, thank you, thank you.
You're welcome. Good morning, Mr.
Good
Chairman.
morning.
Good morning, everybody.
Carol.
Morning.
So resolutions A through E are for permission for me to move forward and submit the section 5311 rural funding grant agreements. And there is an application for every property, including Portland. Within them combined, we have $5.4 million in operating funds, which are both COVID funds and core operating. And we have a little more than $2 million worth of capital costs that we will be requesting. We are not guaranteed the capital portion of these applications. They will award as they see fit at the state. Although this is federal money, it is a pass-through from New York State DOT. The applications are due February 4th, and with your permission, I will move forward.
Any questions? This is standard. Do I have a motion? Luella, second, Neil. Any discussion? All in favor? Aye. Okay, very good. I'll have, blue pen after, right? Do I have to sign it?
I have a little bit of time for that. A couple months, I'll be back for that.
Okay, all right, very good.
And I have resolution.
Yeah, keep moving.
So resolution F is same instance. I need to move forward with the federal application for section 5307 and 5339 funds. That is for our Syracuse operation and our Oneida operation. And that grant application at the moment is currently for a little more than $26 million. And with your permission, I will move forward with submission to that as well.
Is there something different between the first one?
It is,
Besides
the
last
the
sheet?
first one is an error, so it's gonna be additional sheets on the one that was placed on the table.
Okay, any questions? Motion? Tony? Second, Neil? Any discussion? All in favor? Aye. Okay. Okay. Any other discussion? We're gonna go, right, we're gonna take a few minutes, and we'll go right into the meeting. Okay? Thank you. Pledge of allegiance. Steve, can you lead us in the pledge, please?
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Just a moment of silence, please stand for the people that are struggling out in California. Thank you. Okay, we have a quorum present. Our next meeting will be February 28th. We'll have, it's gonna be an earlier board meeting that day. We're having only one committee to meet, audit and finance, and a 9:30 start time. I have a motion to approve the minutes of the December 20th meeting. Okay, Tony, second, Julius. Any discussion? All in favor? Aye. Okay, keep moving here. Chris.
Good morning, Mr. Chairman. Thank you. Good morning, members of the board. Following suit, we are still continuing to draw down COVID funds, the ARP funds. Last month we drew just over $1.1 million in funds, leaving us with just over probably about $4.25 million remaining to draw down, which we still anticipate to continue to draw down through the end of this fiscal year to support our budget. Giving you guys an update on Cortland County. As we know, when we started this conversation, we were joking about it last night. 7 months seemed like a long ways away. I'm sure the other folks in the room would agree. But now we're about 2.5 months out to go live with Cortland. The timeline is fastly approaching, and things are coming along very well. The continued help from our legal team with Brad. We're continuing to meet with local stakeholders, continuing to meet with the folks in Cortland County, the mayors, the towns, the SUNY Cortland. We have a meeting coming up with Cornell, TC3. So we're pretty active down there doing that. Good news is we were able to solidify the subsidiary. That was Central of Cortland Inc. has been created and blessed by New York State. So we're moving forward with that and look forward to continuing to build on the status down there. Continuing with Cortland, and certainly jumping probably on something the chairman can speak to, is we were down there last night, the chairman, Steve, and I, to meet with the Cortland County legislator, give them updates on this merger, just to keep them in the loop. We were included in the agenda for the county legislature last night, that the chairman was able to speak to the county.
Yeah, so last night was interesting. We went down there, we had a meeting at 3 o'clock with maybe an ad hoc committee of the board to talk about what the commitment is of a board member, what the process is to become a board member, the structure. So we spent about a good hour going back and forth with that. And now I had to remember, this is 20 years ago when I went through this, so I really had to go back in time a little bit. But we talked about that. And then Chris and I both had a conversation where we thought it was appropriate actually to welcome them into our family. So last night we went there, we were on the docket, and we welcomed them, and I had a little discussion about our authority, and it went very well. It was very well received. One of the gentlemen on the legislature, as he grew up in Syracuse, he lived on the bus. And he says, he spoke to as a practitioner riding the bus. So he was very complimentary of his experience growing up in Syracuse with using our services. And it went very well. We had time in between meetings, because there was a 3 o'clock meeting till about 4, and then there was a meeting at 6 that our part we didn't get going until maybe about 7 or after 7. So in the meantime, Chris wanted to bring me around, and Steve was also there. Steve has got a great relationship with the leadership there too. Bring us around to take a look at the properties and where they currently are, and also the potential site, which we'll talk more about, that we'll probably end up leasing. But it's going to be an adjustment here, because we're used to things a certain way, our properties and everything. So there's going to be some challenges to bring it up to the central level. And I also explained to the Board of Legislatures that please be patient. We're gonna have some ups and some downs. We're gonna have some ups and downs here. And it was good. They were happy that we were able to, and I said on behalf of the whole Central family, the board and everything, so. I thought it was very well done. I want to thank Chris, and I want to thank Steve for you guys, I can't believe how many people you folks know already down there. It's amazing how many people coming up. So, and I think we're taking the pressure off of a lot of that personnel down there too. You know, as we're talking about submitting applications and everything, and they were quite excited because of the support that we're giving them right now. So, looking forward to that. But I think you have to look at, I told this to Chris last night, I said, Oneida was a little bit easier as far as the structure of what we had, as far as the facility and all this. It was more difficult though, the size of Oneida compared to Cortland, so there's different challenges here. But I'm very impressed how far the team here has worked to get us where we're at right now. So that's mine.
Yeah. Thank you. So continuing with certainly the hot topic right now, the state budget. Steve and I met with Assemblyman Magnarelli on January 15th to continue to advocate for our ask, an increase of 15% in STOA for across the state, looking to continue to support and build on our enhancements that we've done over the last couple of years. It was a great conversation. He understands our ask, certainly gave us some feedback on what we can do to try to leverage more. It also talked about just an update on Cortland County, where we are with that, asking him to help establish and pass some legislation to continue to make that merger happen. Talked about BRT on demand and our upcoming system redesign that we mentioned last month that I'm sure Brent will have some updates on today. With the state budget, since the writing of my report, it wasn't included, but the executive budget was released on Tuesday of this week, the 21st. The governor's budget did put forth a 3.4% increase in STOA. This increase is greatly appreciated. It's a great start. Certainly we know it's not the 15% we're looking for, but we're hopeful that we're going to continue to advocate to see that percentage increase.
Can you explain that in numbers, dollars to the board?
So the initial, so the total increase we received, if you look at the budget for the CNY RTA line in state operating assistance, is just about 2.5 million. In that 2.5, the 3.4% equates to 1.8 million. We were also, you will see in our budget line that with the merger of Cortland, there's already state operating assistance dedicated to Cortland in the formula line, which is where Tara was talking about the 5311. There's some operating money that's in there of 730,000. So we were also brought that 730,000 was deducted from the formula line and then moved into our dedicated funding source. So we received a total of 2.5 million in increase this year on the executive budget, but it's broken down a little bit differently between the 1.8 from the executive budget and then the 730,000 from the Cortland current line item. So that is in our budget. We're going to continue to build support with our partnerships with the Assembly and the Senate to increase that number to 3.4%. And Janine is working diligently scheduling those meetings with all of our local electeds as well as, Oswego, Cayuga, Oneida, and Cortland counties. Continuing, just some regular conversations. The conversation with St. Joe's, so the team and I, Melissa, Kate, Steve, we met with St. Joe's Hospital to explore a similar agreement that we have with the city of Syracuse. We probably about a year ago now entered into an agreement with the city of Syracuse to subsidize their employees being able to ride our buses by showing their employee ID. The program is going very well. I want to say we're about 10,000 rides a month? Total 10,000 rides a year, sorry. For the service with the city of Syracuse. So we're looking to hopefully leverage that program and expand it to St. Joe's Hospital. We're waiting on some technology to continue to do that. It's part of our farebox upgrade that we started last year. But we're going to brand this and market these types of agreements going forward. And we're making it a high priority to continue to build ridership and build revenue to the organization. So more to come on that, but we wanted to let the board know that we are looking at alternatives and other things to continue to build that program. We think it's a great opportunity. Continuing through, this week we also met, Brent and I met with Mayor Walsh. Neil was there and a couple other staff members from the mayor's team. They just give an update on transportation and the city of Syracuse continuing to leverage that partnership. The state of the city was last week, which I was not able to attend, but the chairman and Steve did attend that.
I thought it was really good, Neil, thank you. And Tony also was there, and great auditorium, and the production from the marching band.
Yeah.
Kudos, man. Those kids knocked it out of the park. Let me tell you, I could have listened to them all night. But Neil, you can tell, and Steve was also with us. The mayor, I was very impressed with his vision. And also, he also thanked us for, he had a little shout out for something with Central. And boy, he's gonna be missed. He did a wonderful job, and I think the venue in that auditorium was just something, Tony. So your gang did a good job too, and it was good. It was nice to. It was just nice. A lot of good things are happening out here. A lot of good things, and I don't know how you guys keep track of all those projects. I didn't keep track.
So we were able to elaborate on a couple of the key points that the mayor mentioned in the state of the city, BRT being a hot topic for him and a project that he's definitely got behind to support. So we gave him an update on that. We also mentioned the system redesign that has taken place in conjunction with the development of the BRT system. And then we just talked about some things that they can support with us as far as recruitment ideas and future potential partnerships to continue to build our workforce, whether it's through the mechanic rates or how we can do things to recruit drivers. Certainly we know there's a lot of potential out there, and there's a lot of people impacting the labor market as we look at the horizon for Onondaga County and Syracuse. So how do we continue to leverage that to make sure transportation's at the table for supporting them? So great conversation, looking forward to more. As Nick said, the mayor will be missed in his 8 years. I think we all at the table and certainly in the employees, the staff, the partnership and the relationship we've had with the city over the last 8 years is the strongest that I can recall in my time frame being here, and certainly hearing it from the other senior staff members. So we're looking to continue to build that as the future, and we appreciate his support. And then, the continued meetings that we always talk about, as we look at recruiting, capital planning, the RPM program, we'll do our roadshow, our annual roadshow is next week, so I don't have updates on that, but, we'll certainly come to the table in February with our annual award winners and our quarterly award winners, and then working with our transportation consultant, and as we mentioned, our fare box upgrades. Any questions on my report? I did pretty good. So moving into staff reports, I know it's been a few months since we've had them just on time frame. So kicking it off, Jeff.
Thank you, Chris. Good morning, Mr. Chairman. Good morning, members of the board. I want to talk about the bus code, give you an update. All the diesel buses out in Utica are in service. There's 19 total. 6 of those are 35 foot and 13 are 30. And they all have bike racks. And what we have been doing with the remainder fleet is taking our retired fleet and taking the bumper and bike rack off so we can retrofit it on the older fleet, so they all have bike racks in Oneida County. This is something that they've been wanting out there for a long time. As for here, we've got 42 out of the 64 CNGs in service. 4 are still in California under construction. One of the biggest delays is the bus seats. Unfortunately, they still haven't arrived. I just asked yesterday, they're still there. So they're gonna be shipping soon. As for getting in service, we've had several issues. Humidity sensors, transmissions, HVAC issues. These are some of the things we're having. That keeps them from going in service, and unfortunately it keeps them from, they get out of service, we have to send them to get repairs. So we've been struggling to keep them in service. Hopefully we get this resolved. These buses are all under warranties. They are going to the vendors to get fixed. Restroom renovations. Upstairs is complete. I encourage you all to go over there and check it out. It's a mess. Went over there and checked it out. Yeah. So,
Good job.
Yeah. Thanks. As for downstairs, the maintenance is underway. They've gutted everything, and the contractor is now working on the plumbing and the drainage. We're looking at a March deadline, March 18th.
You know what, Jeff, too, I noticed, as we got back from Cortland last night, I wanted to go through the garage, and, I noticed that you had a few offices, those little pods.
Yep.
Oh, I'm sorry.
Yep,
Go
they're
ahead.
on. I was gonna say, all the offices that are down there
I thought that
are all
was-
complete.
Yeah,
Yep.
and it's great, and actually Chris mentioned to me, he says, Nick, because when we walked by, I think it was the mechanic's break room, Chris said, Nick, I know what you're gonna say, we're gonna deal with this, because it needs a little love, okay? And,
Yes, it does.
but Chris said, you got it, I didn't have to open it up, I just looked, he knew what I was thinking, so,
Absolutely.
okay.
And as for Oneida, we've got Wendell, our contractor, is going to be looking for a new location for us. We had meetings this week. It was great. They got to look at Rome and Utica, get to feel for the operations. We all sat down, had discussions on what we can do. Some of those things were the goals that we're looking for, operational goals, current challenges, things like that. Eventually, it's essentially what works, what doesn't work, and what we might want. Wendell gave a nice little, hey, we can give you guys some ideas, but they also said there's 2 properties, newly built properties in the Northeast, Massachusetts and Connecticut, that we can go visit, which we plan on doing that next month, so we can go ask them questions. What do you love? What do you not love? What would you have done different? Okay. So we'll keep the board updated as that goes along. All right. And that's all my report.
Thanks.
Thank you, Jeff.
Jackie?
Good morning. Just a very brief update. Just wanted to let you know that in January, we held an open house here the first weekend of January, which was very snowy and freezing a little bit. But we did have at least 8 candidates that showed up for that, so we took that as a good sign because we knew that they're the ones that actually wanted to work and were serious about the job. And then what we did the second week of January, for the first time, we held an open house in Utica. And we had 8 candidates show up there. So that was a good sign for us too, being that it was the first ever open house that we had out in the Utica area. From this, we are going to be starting a class next Monday on the 27th. We have 18 drivers starting in Syracuse and 10 drivers for Utica. So a total of 28 will be in this class. This is the biggest class that we've had in the last couple years. So we're looking forward to it. And hopefully they'll all turn in and we'll get the numbers up. So, any questions? Yes.
Definitely. These drivers are coming through, how many drivers will we have now?
We're still around 150.
About 30.
Yeah, we're still hovering right around 150 right now.
So we're down 30.
Yeah,
Yeah.
probably
Give or
about
take.
30.
If
Yeah,
you were to
give or
compare to
take.
our highest full 9 pre-pandemic, it's about 30.
Yeah.
But we're seeing hopefully this trending in the right direction, and some of the things we continue to do with the union and partnership, that we're gonna see these numbers grow. We may never get back to 180, but we're certainly trying.
You know, hold an open house in Cortland.
Yes, we are. In fact, we're looking at holding an open house in Cortland the first, either March 1st or March 8th. We're talking about that. Right now, we're trying to go over the preliminary, like where it's gonna be, you know, because we don't really have a location yet. So there's some details that we're gonna try to hammer out, but we are going to be doing that in March.
This is on my mind. I know you're still working on building up in the real of the staff and stuff like that. So a lot of times you don't get to see all the things that go on underneath. So you're building that up, so that you all, what's that word? That you're open to doing this. Does that make sense what I'm trying to say?
I think so.
Oh, in the words.
You get it, Tony?
Always.
In order to get the drivers to know that Central is for them,
Yes,
you have to build up.
the morale and
morale
everything,
and
yes.
everything else.
Yep.
If you don't do that, in negative, but or what are the positives and stuff like that.
Sure.
So
Yeah, we're always constantly working on, trying to build up the morale around here, so. Any other questions?
I also think it's important for Frank and Jimmy to
Kim?
that the board we're behind filling these open positions, okay? We're trying hard to fill these positions. I'm not trying, the team's trying hard, and Chris has, really had many conversations with me. He wants to get this complement filled, okay? It's just that finding labor to do it has been, and I've actually came up before an open house before on Saturday. And, just because you started at 28, it's what's gonna be the yield now. What's gonna be the yield from that 28, because it's gonna come down. So, but we want to get those positions.
Yeah.
I also want to say, Central is not the only company is having problems with
That's what I
recruiting.
was thinking.
No.
We have to understand that. So it is an ongoing thing with any organization, any company that you can think of. So it is not an isolated incident.
No, and that's very true, Luella. I mean, it is across the country, it is right now. It's not just Centro, it's not just, transportation either.
No.
So,
And those are conversations that we're having, Steve and his team and us and the HR team to really look at what sets us apart from those other companies that attract people to want to come to us.
Yeah.
So we have some things in the works right now, some commercials other than just a straight recruiting commercial to really promote an image campaign of Centro and get people back around the buzz of looking at Centro. We do more than just move people A to B. We're involved in a lot of events with fundraising and partnerships, and we need to tell that story. To get that out there, that people know when you come and work here. Yes, it's bus company, but we do a lot more for the community that people don't know about.
So in other words, you're evaluating what other companies are doing to see what's in.
Even that, or what we can do to just promote us. One of the biggest things is promoting us, and I'm sure over the years, as we look in the future years, it's hard to, when the budget became tight, the marketing budget got hurt, and we never promoted us. It was word of mouth, it was conversation.
Right.
So how do we work through some of these things and try to promote Centro in a light that people can look at it differently and want to come here.
You worry about too in the next, say, 3 to 5 years, the baby boomers. Okay, now we gotta think about the retirees too that are gonna naturally happen too. So we're gonna lose, a lot of good people just based on retirements.
absolutely.
How long do you have to work in Central That's like before you're eligible for
How long?
So for the defined benefit, it's 10 years. For the 401A, the defined contribution, it's only 5 years. Why, how long is it at the school district?
You wanna go in the school districts.
No, it's not. No.
Do you do job sharing? Not even a question. That.
That would probably be difficult though, because they're on the road kind of the same time that we're on the road. I mean, our peaks are morning and afternoon. Theirs are the same because they're getting the kids
Would
to
that work in
school.
the summer?
We do have people that are part-time drivers that will work for us seasonality, the
Yes.
summer, the state fair, breaks. It just depends on how frequent, because there are requirements if they don't record any hours over 30 days, we then have to redo a drug screen to bring them back into current to let them drive. So
Any hours for you or any hours for them? So those 30 days, I drove the bus for the district.
it's just
No,
us.
it's
It's
us.
they have to drive with us on that.
That's our policy.
You can drive where you want, Monty. Come drive for us, come drive for us.
I was there, right, in a bus?
Yes, you
you
were.
did.
Yeah, I took step 1, rather than some people have to admit.
We'll get you an application for
There
step
you
2
go.
this afternoon.
Yes. Any other questions?
How many people do you anticipate this year retiring or leaving?
Oh gosh, Bob, that's a great question. I would say you're looking at least 10% of the workforce, probably.
So about 13.
Mm-hmm.
Aerobics,
Yeah.
I do wanna say, to touch on Julius's point, that, one issue is getting people into the job, the other issue is retention. Once they get here, we can find a way, like you said, to make them comfortable, in their job and keep them here. That's 50% of the problem right there. I think that's something we should consider working on.
Well, I think you and I have started that, Frank, in regards to the mentorship program that we're looking at developing for the drivers and also for the maintenance personnel. I mean, I think that would definitely assist them.
I get a chance, since I'm retired, I can do this. You guys are working, so you can. I get a chance to talk to the drivers and people, sometimes it seems to be just talking where they are. You get ideas how they're feeling. Some of them, be transparent with them about what's going on and stuff like that. But a lot of times, they just get in the bus and drive their bus, and they're not looking at anything else. But I don't know how you're working on that, but it's there may be some type of incentive also besides this.
So we do.
One thing I thought, and it's a good point that you brought up, Frank. I think this year, it was very important that we deliver a good, solid contract. Okay, on behalf of management and labor, because we're still under the same flag. It doesn't matter if we're organized or not, we're still same flag here. But I think we really made strides this year from a financial commitment. The 20 years that I've been on this board, that was probably the strongest contract that was delivered for both sides. Both sides. I just wanted to mention that. And well deserved. And well deserved. But I think there's always room for improvement. There's always room for improvement.
And Julius, to your point too, that's where we developed that RPM program, the productivity program that, when we sat down in 2019 and talked about it, but then Brian gave us the go-ahead to build on it, was when he had to sign the attendance award that awarded a person $10 for a perfect attendance in a calendar year. And then it was multiplied by the number of consecutive years you got it. It was almost embarrassing to sign that letter. The operator of the month program that we had that awarded one person to have to meet certain criteria, and there were months people didn't meet it. So we really invested in that, and we've been doing it now for coming up on our 4th year of putting funds back that every employee on the union side qualifies, to recently expanding into an administrative quarterly award as well. So we've started that, and we continue to build on that to hopefully put some financial incentive on the table for operators to achieve. So,
Good conversation.
Thank you.
We understand the financial, what you put forward. But also, we have to understand the number of staff we have, the number of employees Central have. They also have to have that feeling of belonging, the feeling of I do value. I'm making a difference and not feeling isolated or rejected.
Absolutely.
Good point. Good point.
Thank you, Jack.
Agree. Thank you.
Raman?
Good morning, Mr. Chairman, members
morning,
of the board. So operations continues to work through several previously announced projects. Today I'm just going to give a couple of updates on those projects. First, I wanted to go into detail a little bit and give an update on the uniforms. A couple of months ago, it was announced and approved to move to a new vendor. This is a more difficult task and project than one might think, but We have successfully rolled out the new platform, the new portal for all of our employees, hundreds of employees, and that is going well. Earlier this week, we rolled that out. A couple of the more complex parts of that were adding customizations, adding new options. We offer now a orange polo for supporting SU football and basketball games, which can be worn at during those days, home football and basketball games, as well as a pink polo for supporting Breast Cancer Awareness Month in October. We also now offer a ATU patch, which our union members can elect to add to their uniforms. So that was it's been a successful launch, and we're happy to roll out the new options for our staff and have them look professional while also supporting different causes and teams. Second update is regarding our planned transition to VIA for our call bus. This has been a very ambitious and difficult project, but working with many departments around the company, from procurement to IT to marketing communications, and most importantly, Josh Gardner, who I would say has managed the entire project magnificently. We are still looking for a February 2nd transition date, and this will represent the biggest improvement, in my opinion, to our call bus operations in a long time. It'll significantly improve.
Second, third, fourth, fifth.
So it'll significantly improve the level of service to our customers using an app and being able to see their ride coming, order and cancel rides through the app. So we're really looking forward to rolling that out. And not only is it going to be a great improvement to our customers, but it also add a level of efficiency to our operations that we have not had, both to our own drivers and operations, but also to our vendors, which will allow us to more efficiently and effectively manage the ever-increasing demand on our call bus operations. So we're really looking forward to that. I'm going to allow Josh to give some more detail on what went into that project. It was very involved, from training all of our vendors over the weekends, which he did, and programming tablets, and so he'll give you some updates on that. And I will also call him up to give the quarterly call bus report. And that's all for me. If there's any questions for me, otherwise we'll bring him up to talk a little bit more about VIA.
Thanks, Ron.
Okay.
Thanks, Ron.
Good morning, everyone.
Good morning.
So I'll start off with the Call of Us quarterly report. Not too much on here. Ridership is still increasing. Went up about 6% consolidated, which has come down a little bit. We've been seeing about 10% increases. So it did slow down just a bit for this quarter. I think weather did play a big factor for this quarter. When we're looking prior year, last year, we had much weather. So this year, obviously, it's been cold, snowy, so that impacts. We do see snowy days. We probably see a 25 to 30% cancellation rate. So it does affect our ridership quite frequently. Other than that, there's nothing really that stands out on the quarterly report. We did transfer several rides to fixed route. That was mostly in October, where we still did have the good weather. In the colder months, November, December, you'll notice we transfer very few rides. Most of it's done with Call of Us. All right, getting into VIA. So that's been a big project. This is moving all of our Call of Us customers and Oscar customers for all properties over to the new system. So we actually had to transfer 7,000 different client files over to the new system. So that's been quite a project, making sure everything's correct so that when we do roll out on February 2nd, we have everything ready to go for the customer. On top of that, there's been a lot of training. So we've been doing a lot of driver training, in-house drivers and vendor drivers, and at the outer properties. What we do, part of that, is we send them out on dry runs. So we'll give them some test customers. We'll kind of mock up their current manifest for the day. with customers like myself, other people in the office, where they'll follow along on the new technology to make sure they understand how it works, how they mark that they've arrived, when they mark it as a no-show or they perform the ride, how all that works. So we've been doing that the last 2 weeks. We'll continue that till next week until February 2nd. On top of that, it gives my staff inside the ability to see what's going on the road. All right, this gives us more information than we've ever had before. So before, we used to, somewhat with the old system, be able to track our drivers only. So only the call bus drivers, which only do about 20% of the work. 80% of the time, it was vendor drivers. The only way we could get a hold of them was basically calling out to them. We couldn't see where they are. We didn't have GPS tracking on them. The new system allows us to track where they are, and it will give us notifications when they start to run behind. Before, we had to rely on the driver to reach out to us to let us know. This will start to let us know immediately. If it starts to see trips in the future going to be behind, it sends us a flag. All right, for all of our drivers, in-house or vendor, to let us know, hey, this may become an issue. That way, we're not showing up 30 minutes late for a customer. We can then look at it, be proactive, and say, all right, let me see if I can move this trip to another run that may have a few cancellations. So it allows us to be proactive rather than reactive, which will make a huge difference for the customer. The other thing is the customer can now see it, all right? Right now, they could not see a thing, and I know Tina does this. You go outside at the time we tell you. We say, hey, your pickup's 10 o'clock. You go outside. Typically, you probably go out a couple minutes early. Well, at 10 o'clock, if it's not there, well, where is it? It's the unknown. You can't see where it's at. So now you're either sitting outside in the cold, standing outside in the cold, waiting for the bus, and you just don't know. You know, it makes people uneasy. The new system, they'll be able to see where the bus is. It'll notify them 10 minutes prior, hey, your bus is 10 minutes away. You can check the app to see where they're at. Once the bus arrives, it sends them another message saying, hey, we're outside, we're here, ready for you. That way you can go outside. You're not standing outside in the cold, the rain, whatever it may be that day, or the heat. So it's going to give the customer ease of mind. They don't have to worry. The other good thing it does, at times we do have no-shows, but the customer never knows when they're a no-show. So sometimes they'll wait 15, 20 minutes. Well, now the system will say, all right, once the driver arrives, if it ends up being a no-show, it'll notify the customer. That way there's no confusion later on. Sometimes they do get held up in doctor's appointments, then they'll get that notification, hey, we had to proceed on to the next pickup. That way they know. That way they're not waiting outside in the cold, the heat, saying, where's my bus? Maybe it's coming, maybe it's not. They know for sure, unfortunately, we missed you. Contact us, we'll find you another ride.
Then go back to the app.
So for same day, they'll have to contact the office directly, but if there are any future trips, they can book in the application. They can cancel same day rides. With Call-A-Bus, it's only same day assistance we do, so we have that all come to the office.
And this is gonna help all those wonderful young ladies who get yelled at a lot.
Yeah, and that's the hard part is a lot of times right now we're receiving the call from the customer, hey, where's my bus? We then have to contact the driver. The driver's most of the times driving, they're not gonna answer. So we couldn't give them an answer right away. The new system, we can pull it up. Even if they don't have the app, we can pull it up in our system and say, oh, your vendor driver, he's about 2 minutes away. He's over here on this street, he should be there in about 2 minutes. There's clarity, because there's gonna be, even though this technology is gonna be out there, we're not gonna see a lot of our customers move to it, just because of who our customers are. We do have a lot of customers that are 70 years old and older. We have, I think, somebody who's over 100 years old currently on our service. So those customers are probably not going to download the app to see where it is. Right. But when they call us, we'll have a better answer for them than we had in the past. We have started to put signs up in Call-A-Buses letting customers know. We're updating our website to let them know about this, and most importantly, our current IVR system. So all customers currently have to call us. So we're using the IVR as the big promotional push, because as soon as they call, they'll hear about the new changes coming. So we put that in the forefront, because right now, to do anything, cancel, book a ride, it all comes to the call center. So they'll hear that, they'll know, hey, this change is coming. But the good thing is, they can still do everything the exact same way as they can today. They can still call. So if they don't want to use the technology, they can still call. Our transportation coordinators will answer and book the ride for them. So they'll see almost no change if they don't want it. If they want to see the change where they can use the application, they can use a credit card on the app, they can see where their rides are, cancel their own rides. It kind of is like the Uber of paratransit now. So they'll have that kind of feature. The other good thing is if a loved one has somebody on the bus that takes the call bus, they'll be able to see where they are en route back home or to their appointment. So they'll be able to see where the bus is, the estimated time it's arriving, and somebody can actually share that information. So if you're, Tina, going to somebody's house and you want them to know when you'll be arriving, there's a little button you can there and it says share with friends. You can click that, it'll send them a message saying, hey, Tina's en route to you, she's on this vehicle, she's estimated to arrive at this time. So a lot of good features in this program. It's not only gonna benefit the office, it's gonna benefit the customer, and ultimately it's gonna benefit the driver. With this system too, it gives the driver turn-by-turn directions, all right? Right now, they have to manually enter all that information in. This system, as soon as they pick up that person, it automatically starts routing them to the next one. So very little interaction they have to make with the screen.
We are gonna encourage people to use the technology.
Yes, we're gonna encourage people, but we have the understanding that not everyone will.
Yeah, there are
It'll
people
be-
who don't have cell phones.
Correct. It's gonna be their choice.
Right.
But we're definitely gonna push the technology out there, let them know it's available and that they can manage their own trips now. And there's a lot of people that do want that, to be able to manage their own trip.
You spoke about VIO.
VIA, V-I-A.
Okay.
It doesn't stand for anything, that's just the name of the.
Oh, okay, I was thinking about those bikes at home.
Oh, yeah, no, so, yeah, that's VEO, VO, this is VIA, V-I-A. So, yeah, and it doesn't stand for anything, because I asked that, it's, yeah, two different companies.
Please call us.
One of the things that happens when you try to schedule on the system you have now,
Mhm.
you can only schedule the places you have gone in the past. If I wanna go somewhere that I've never gone before, can I still use the VIA app?
Yes. So what's good about the VIA app is it's using a Google map in the background with all of Google Maps points of interest. So if you say, hey, I want to go to Walmart, it'll pull up Walmart and ask you which one. You don't have to have traveled there in the past.
Cause that's what that
Yeah,
thing
the
does now,
IVR.
it drives me nuts.
Yeah. Yep, you can anywhere.
I love it.
So you can even, so let's say, because Google's never 100% accurate, there's addresses sometimes that just don't come up in Google. You can actually move the pin on the map to where you want to go.
Oh, that's neat.
So on the app, you can just move that pin to where you want to go. It'll say what that address or what Google thinks that address is, and then guide the drivers to that point. So yeah.
I'm loving it. This means no more people picking you up the wrong door, trying to pick you up the wrong door.
Correct. No more of the wrong door. And that's the good thing is you'll be able to see if they're at the wrong door on the app.
Yeah, that's gonna be so good.
We do get some confusion sometimes too with Mary Street. You have a Mary Street in North Syracuse. You also have a Mary Street on the north side. So sometimes, you do have that confusion. You won't with this system because the system is going to route you to the right location.
Like Roxborough Road and Roxborough Circle, where people think I live in an apartment, and there's no ramps outside these buildings. Where do you think wheelchairs coming from? My wings?
Yeah, so if they're over there, it'll keep trying to route them to your address. So, yeah.
Oh, I am so excited for this.
It takes a lot of the guesswork out of Call of Us. Yeah.
And I have something to share that I think you guys should know about. There is another push for extending where we pick people up. There is going to be presented, because they called me. Everybody calls me when they want to talk transportation. Rochester, Buffalo, and Syracuse would be given $25,000 to expand their call of us runs. And there's a hard and heavy push, and believe it or not, the push is coming out of Brooklyn. And I have no idea why it's coming out of Brooklyn, but there was a committee formed, and everybody knows that I sit at this table, and
I spent an hour answering questions about why I thought our paratransit system was really great and the way things are going. And listened to everybody complain about Rochester and Buffalo, they should come visit us. But there is this $25,000 that's gonna be attached for each property. And it's getting positive feedback from legislators. Just thought you all.
So this is a bill that's in the state.
Yeah,
Because I know there was the bill that was out of Buffalo that Kennedy sponsored that did a trial run.
right, now that they have the
Right.
results, they're pushing farther.
Okay. We can look into
Good job, Gina.
And I told them that I was gonna share it at this table, and I said, I personally would love that, but I'm not sure how feasible it is.
It becomes very, very expensive depending on how they're looking to expand. I know we did some analysis on the initial 3 mile versus, mile and a half.
Yeah,
The
they
big
are
ones.
talking 2 to 3 miles.
Yeah, we did do some background on that. I'll take a look and see if I can find who's sponsoring that bill and talk
Yeah.
to the NIPTA Association on what our approach is to that.
Yeah, I told them I was gonna share it, and I said, some people will say, yes, our seniors and disabled deserve to be able to get to these places. The people I talked to had never heard of Oscar. So I shared what the Oscar program was about, and I said, maybe you need to start with that.
Yeah.
I tried to deflect and,
Well,
and send it to other, because as much as I would love all of that, because I'd probably get some Sunday service,
Yeah.
I know it can be too much.
Yeah, and I think we're unique in that Oscar program. So in Onondaga County, we have our Onondaga Senior Call Ride, where they can book rides Monday to Friday, 7 a.m. to 7 p.m. anywhere in Onondaga County. This is a partnership with Onondaga County Office of Aging and Youth that we've been doing for
Forever.
18 years I've been here, so
Forever.
it predates me. So we've been doing it forever.
It feels like forever, because I feel like I was told when I lived in Brewerton, you just have to be old and you can get rides. And I thought, that doesn't sound fair. I want to go to work.
Yeah, and that's a great partnership that we do have with the county. It is limited to 2 round trips a month, but for a lot of people, they do both. They have Call-A-Bus, and then they have the Oscar program for any doctors that may be outside the service area. And that may be, an approach that other counties can take as well.
As much as I believe in the expansion, in this time of not enough drivers and all of that stuff, I don't see it being super feasible.
Financially support that. 25,000 is not nearly enough.
And ultimately, at the end of the day, we want to make sure that we can transport the people in the area of the fixed route service to make sure they're still getting the service that they need. The further out you push it with limited funds, the likelihood, if you notice, there's no denials. We don't want any denials. We don't want to start to refuse people rides because we don't have enough drivers, enough service. So that's where I think the big push is. It has to come with funding if it does come along, because I'm not opposed to it. But we just need that funding to
And
make
that's
sure
what,
we can take care of the
that's
customer.
what I said to everybody. Nobody at this table would say, no, that's a terrible idea. Let's keep all the disabled people at home so we don't have to look at them. But it is such a big endeavor financially, and that's the one thing I've learned at this table. Rick used to bring them out, the pictures of me protesting and chained to a bus and all that kind of stuff. I said, yeah, but then we were just looking for the service that we got right now. It's never going to grow unless people push the envelope.
Right.
So I support pushing the envelope. I support it being done after we can get enough people to drive the bus, and after we have enough money to support that. Because we spend way too much on outside drivers. Because they're not as well trained and as qualified as the guys who come from in here. I always tell the person who's booking me, if you can book me on a call bus, that would make me really happy.
You always bring good information from being a user of the service, and we appreciate that.
And I have all my ears on the ground with all the other advocates. I know.
I'm sure you did.
I know what they're thinking and doing.
Last thing, we did do a demo for our Accessible Transportation Advisory Council earlier this week. And once we go live with the app, we plan on going to other either employment centers or groups that may want a demo. Go in person, kind of show them, hey, this is how you use it, this is how you can get access to it, and here are the benefits of it.
Yeah, I'm gonna try to arrange a couple of them with a couple of the groups that I know, just to get them over the anxiety. A lot of people with disabilities and elderly have a lot of anxiety about change.
Yeah.
Is this just in Dunn County or?
All the properties. Yeah, and this. Yep, and this will be for Cortland when we get to that point as well.
Josh, do you have any materials so I can send out to my people in Utica Rome?
Yeah, we got a few flyers and everything I can send out.
Email
Yeah.
to me, and then I'll put it out on my Magic Network.
Yeah, and then I'll send you the link to our website that'll have the information as well.
Awesome. I hope you get this out.
All right, sounds good.
Thanks, Josh. And certainly thanks, Josh and Ron and the operations team to really get this going. It's the biggest change we've done in a long time. And we're looking forward to seeing it hit the street. Steve.
Good morning. Give you an update. Start with ridership from December. Ridership continues to trend up, slowing down a little bit from the double-digit gains that we've seen month over month most of the year. As Josh alluded to, the weather has become a factor in ridership. It's just this is an old school winter that we're having. Brings me back to my childhood, but I'd rather not have to deal with it. But ridership was up about overall a percentage and a half. Some of that skewed by Syracuse University having many fewer days this December compared to last. In Syracuse, the core service was up about 8%. Auburn was flat, down a little bit. Oswego was down a little bit, which is unusual, but again, that's driven a lot by the college. Utica was up 10%, and Rome was flat. It was down about 4 or 5%. But a lot of it is due to the weather and also the fact that the holidays, Christmas and New Year's falls on a Wednesday. It affects the entire week. It really is a little different than what we normally see in December. So I'm not really concerned, but I can anticipate that the ridership will continue to trend up. January, we're seeing a little bit of a drop as well, but that is completely weather driven. The cold weather is just really entice people just to bundle down inside their house and not go anywhere and limit their trips. But once the weather breaks, I think we're going to continue to see a 6-7% increase month over month. As we talk about all that's going on, it's just a very busy time for this organization, service development specifically. We have a system redesign that Brent's going to talk about in a bit. We're redesigning Oswego. We are getting BRT ready, and in 2.5 months, not even a little less than that, we're going to be beginning service in Cortland. So it's just a time that since I've been here, it's never been busier from a service-related standpoint. There's just a lot going on. We continue to do our outreach. You're going to see us be very public in the upcoming weeks and months as this moves forward. But it's game on. It's what we're here to do. Expand service, get people to where they need to be. And it's a very, very exciting time within the organization. There's some stress being put on people, no doubt about it. But that's why we're here. We're going to rise to the challenge, and we're going to get through this, and it's going to be great. With that, I'll bring Brent up to give you some more details on some of the projects I talked about. If you have any questions for me or Herb, we're here to answer.
Thanks, Steve.
Thank you. Good morning.
Good morning.
doing its thing. I'll start with some of the project updates that are service development related. So you've heard me say, this is not related, don't look at that, yeah, we'll get maybe. So you've heard me say before that BRT obviously is our big push right now. We're working on this bus rapid transit throughout the whole county, but it can't work well without a system redesign. So the system redesign needs to run in conjunction with it. I've said it before that if BRT is running every 12 to 15 minutes, but the rest of the service is not running except every 40 minutes, then you get to some locations on BRT and you're stuck waiting for the rest of the lines to be working. So we are working on that system redesign. I've been talking about it a little bit and wanted to let you all know, so you guys know what the term system redesign means. It means we're looking at the system as a whole and we're redesigning it, right? We're putting the right size buses in the right size areas and looking at routing and scheduling and how that makes sense most efficiently, right? That's what a system redesign is. But when you walk out of this room and you tell the general public, we're doing a system redesign, they may say, I have no idea what that means. So we're now calling it Better Bus. That makes the most sense, right? We are making a better bus system. So Steve just mentioned one of the Better Bus projects we're doing. The first one that the public will see on the road will be in Oswego. That'll be this fall. And then Better Bus Onondaga will be next year. So that's our system redesign here. And I'm gonna show you our new website. That's why I pulled up the screen for you. We have a page for our, don't do that. We have a page for our Better Bus Onondaga, and Oswego will get a similar page. But this is just giving the public and you and everyone more information about the project. So it starts out talking about the bus rapid transit. It's talking about how we're redesigning the bus network and what our goals are for that bus network redesign to align the network with present day demand and travel patterns to allow Centro to better meet community travel needs through the delivery of more efficient and effective services, and to adjust local service and integrate new modes such as microtransit to reallocate service within the BRT corridors and promote BRT connectivity. On the other side of this page, it gives you the timeline, so everyone can be, we're really working on transparency, that everyone can see exactly where we are in the timeline, that we're here in phase 1, community engagement, and they can see where we're planning to be as we move forward with this project. There's a new email address, betterbus@centro.org. So if people have questions that are directly related to Better Bus projects, that will go directly to the people on our team that can answer those questions most quickly. And then it also has all this other cool stuff. So study findings show some of the research that our consultants and us have already been working on. Where is there demand for more service? It talks about gap analysis. I won't go too much into detail because I know I'm looking at the clock, but where our highest demand corridors are. It shows how the system is currently performing, and it has maps that you can interact with layers, turning them on and off and seeing more details as you get into each of these sections. It also shows route ridership, efficiency, and on-time performance. So really a lot of really cool stuff. Then you get to this page, and I thought this page you would want to see because then I don't have to say all of these events, right? So this one I'm showing you for totally my benefit. These are our upcoming events. So we're doing this first round of community engagement, and we've got 7 public events scheduled from February 4th to February 7th. You can see they're going to happen at the Cecil Community Center, Salt City Market, we're at North Syracuse Junior High School, Fairmount Community Library, Interfaith Works, East Syracuse Village Hall, and Destiny USA. So actually, if you scroll down, I love that they put a little map on this when it pops up. You can see how well we are hitting all the neighborhoods. We're trying to make sure that everyone has a chance. All of these locations are also on bus routes, so everyone should have a chance to come out and start talking to us about the system redesign. And so again, I'm gonna scroll up to this section just to give you, if you wanna stop in, you are welcome to, but of course, we will continue to update you as we have these meetings. We'll have them all before your next meeting. Yes, sir.
You said you had this for Oswego?
We do not have it yet for Oswego, but we are planning a page for Oswego as well.
When you have that page, can you send me?
Absolutely.
Yes, sir. Yep.
And just, I'd like to just kind of like overview, when we're talking about a system redesign in Syracuse, it's not going to be this massive drastic change from what we currently have. It's not going to be like, oh my gosh, it's not even recognizable. That's not what it's going to be. It's going to look very similar to what we have, but it's going to have probably some streamlined routes. It'll probably have a better pulse of frequency, where it makes a little more sense. Connections will still be possible and prioritized, but it may not be a lineup system where all the buses meet all at once. We hope to get as much more frequency, so people can feel free to make transfers at the hub. It may not be instantaneously, they may have to wait a little bit, but there's more options for them during the course of the day. So it's really looking at the system, trying to make it more user-friendly, with also an understanding there's still a core of employment centers downtown. We're also going to prioritize the increase in need of getting people to suburban workplaces, and still trying to fulfill all the other needs that we have with the school district and the university and all the other stuff as well. So it's not going to be this drastic change. Suddenly, there's not going to be the hub's not going to be used. That's not going to happen. We spent a lot of money on that hub, and there's still a lot of people that need to get to the hub. There's a lot going on in downtown Syracuse. So just want to kind of set some parameters on what we're probably looking at.
So you're doing it now, but you're gonna, after the 81 project, you're gonna end up doing it again?
We're looking at this knowing what the system with the road network is gonna look like. There probably won't be much change between the two, once 81's down, one's not. What happens is Almond Street now, instead of a highway above us, it's become a corridor beneath us. The rest of the road network is gonna be relatively the same. West Street's gonna look a little different. How you access the hill is gonna look a little different. One of the things we are gonna have to kind of figure out is that currently, it's just so much easier for us if we're gonna serve the hill to hit the hub first, and then serve the hill because of the proximity and the access point. Going forward, if the access point is gonna be Krause and Irving, that's where the highway's gonna get out. Does it make sense for us to serve the University Hill first before we hit the hub? There's some decisions to make. Those are really nitty gritty in the weeds kind of decision points, but that's the kind of stuff we're gonna be looking at. How do we serve the downtown university employment sectors in a post viaduct world?
So I hear you saying we're gonna be into the middle school?
I don't think I heard that.
I think that's what I heard.
Trying to look at
That's not what I heard. That was just my interpretation.
Well, we can have
Is there gonna be any changes that would like affect the call of us?
No, well, that's not true. We don't know. I think a lot will depend on how the system looks specifically in the suburban locations. It will not affect the core downtown at all. If we get further out from the core, the level of service may look a little different.
You need more drivers, there's gonna be.
It's driver
Few
driven.
things depending, more drivers.
And what is gonna happen is you're gonna have, they're gonna send us an option, and we're gonna say, okay, this looks great if I have 180 operators.
Right.
I have 150, what does that look like? In Rochester, what they simply did is they had, 3 levels, and this may be what we're looking at. They have a 1 hour, a half hour, and a 15-minute pulse. Well, what they did was, when they got short drivers, some of those half-hour pulse units became an hour. Some of the 15 became 30. So those are the decisions you make. But that way, you're just changing frequency. You're not changing the area you serve, which is an easier. Economy of scale, you get more flexibility that way.
And Steve makes a good point about the system not changing dramatically. It was really cool to see as our consultants came in, they started looking at transit propensity, and that's, where is transit appropriate in our community? Where is transit most appropriate? And the areas that they showed on the map overlaid with our routes almost perfectly. It said, we are serving where transit is most appropriate. So that's pretty awesome. Now we just need to streamline it a bit and make it a little bit more efficient. Thank you.
Thanks, Brent. Thanks, Steve. Last up, not least, Bruce.
I was gonna say, I'm not the last one.
Yes, but he's
You got a hard stop here? Or?
As we see the continued improvement and stuff, he's got a little update that's pretty interesting to see.
Good morning, Bruce.
Well, did Melissa already show it?
I can look over her shoulder. I got a sneak peek.
Alright, good morning, everyone. Can't believe the month is almost over, it's on the 25, and time just flies by. So just some updates on completed and ongoing projects. Starting off with the backup appliances that we have here in Syracuse and Utica. Those have been replaced. They're online and fully replicated right now. We ran into some issues initially migrating the data, but that issue's been resolved. This next project, and have Melissa bring up the picture here. This is something that we started months ago, and I mentioned that once it was completed, I'd show a before and after picture. And it's the inside the server room, the racks, for the equipment and cabling and whatnot.
I'm working on it.
Take your time with this.
You don't want to go home on it?
Here we go. All right. There you go.
Can you put it
Yeah.
So as you look on the left, that was the old, and you look on the right, obviously you can tell that's what it looks like now. The issue that we had there was that cables that were too long, big and bulky. So part of that project was installing new equipment, switches, and some blades into the system there. And if you look on the right side, along the left side, there's a what they call cable management tray there. So, and the other thing you'll notice on the right, all the cables as they connect are going, they're not going 2 inches and having a 15-foot cable. So that issue's all been resolved, and that was a labor of love. It was Bob, and his team working with a vendor, having to map out where every one of those cables go to, right? Because potentially, it's affecting a person, a system online. And to my knowledge, no systems were down as he was going through that there. So that was a lot of work. One of the things I did when I first joined Central, a couple of years ago, I went around to all the properties, taking pictures of things, and we have a lot of properties that look like the left there. So there's a lot of job to be done. So hopefully you like the way it looks on the right.
Yeah.
A lot easier.
Increase the cooling a little bit.
Yeah, the fan looks better
Yeah. There's some crazy pictures, IT guys look out there at pictures and whatnot, and there's some things that you look at and say, oh my God, how did they even manage that? So that was
wow, great job.
Next thing is last month we launched the new website. Hopefully everyone got a chance to go out and check it out. Everyone's happy with the look and the feel and everything.
Nice.
If there's any glaring issues as you're going around checking the website out, obviously let us know and we'll try and get those resolved. Moving on into the cyber security side of the house, near and dear to my heart, should be everybody's, right? I've talked about our privileged remote access system. We've had it online now for a couple of months. All the vendors that we work with on a day-to-day basis, they've all been onboarded, and all the remote access protocols, the team viewers, the log me in, the AnyDesk, all that stuff has been blocked and turned off. So the only way outside vendors can remote in to provide support now is through our enterprise solution. The other thing we implemented, it's been online about a month now, I talked about it, and I think Monte knows where I'm going. We've implemented a enterprise level password manager. Like I said, it's been online for about a month now. We've got a rollout to the IT department to get familiar with the application and how it works. And then we rolled it out next to the executive team. It isn't fully rolled out yet. We have some more executives that we got to get onboarded and trained up. With regards to the executive team, and especially users that are what they consider high risk, part of the rollout is we're going to be provisioning those people with what they call hardware tokens. These are phish resistant, right? Because the way phishing attacks work, especially with multi-factor authentication, you get some nefarious email and what's real legit from Microsoft. You say, okay, give me what's your code? They trick people in through social engineering.
You gotta pick it.
You can't do this because this doesn't generate in code. It has to be plugged into the actual device, and that's what does the authentication. So, like I said, we're going to be rolling that out to the executive team and users that we consider like high risk. Several months ago, I also talked about network segmentation. That's going to be a big project too, and it's currently working its way through the planning process. So I'll have more to follow on that as it progresses along. Last thing on the cyber side, and I want to highlight this because it sort of indirectly affects like one of the members on the board, Tony, Syracuse City School District, right? So to give the backstory, we had an admin person submit a ticket to us saying that they couldn't get to the Syracuse City School District website. So we did some
right.
And we did some further investigation, find out that what they were putting in the URL was SyracuseCitySchool.com, not schools.com. So what's happening out there is, the bad actors are going out and they're acquiring domains that are very close to legitimate domains that you go to all the time. Ended up the SyracuseCitySchool.com website was a bad site. So just something for you
The
guys.
imposters he's talking about.
Yes.
And I only highlight that because, it's, everyone needs to be careful when they're out there on the web. Because it's a never-ending thing with the hackers. And very last thing, current project that we're working on is our Active Directory upgrade. It involves software and hardware. We just got 5 new servers in. The vendors here on site who's configuring that stuff, and we did acquire one for the Portland area. And that stuff's being configured, as I say. And with regards to Portland, we put together a list of IT requirements, and we're currently working through the acquisition process on that. And with that, that's all I got, unless you guys have any questions for me.
Good luck.
Thanks, Bruce.
Good job, Bruce. Good job.
And thank you to the board, your patience. A lot of things happening in Centro, especially as we start 2025. These guys are certainly excited to share that with you. So, with that, Mr. Chairman, that concludes my report to staff.
Thank you. Great. Your department heads, you guys did great. Everybody did wonderful. Very informative. I'd like to move on to Audit and Finance Committee. This was all discussed in detail. First of all, we had John Mayloff come in with the United Health Liability Renewal. A motion made to bring it to the full board for adoption. May I have a motion? Tina, second. Darlene. Any discussion? All in favor? Aye. Also, Melissa gave a great report on our financial position and our financial statements. And I liked at the end the question, how you answered it, that we aren't going into reserve. I thought that was very good. A motion made to bring the full board for adoption. I have a motion. Tony, second. Julius. Any discussion? All in favor? Aye. Tara, we bundled resolutions A through E for multiple grant applications for multiple counties. Motion made to bring it to the full board for adoption. I have a motion. Okay, Monty, second. Robert. Any discussion? All in favor? Aye. Resolution F was another grant application, which was made to bring it to the full board for adoption. I have a motion. Tina, second. Neil, any discussion? All in favor? Aye. Did you get it all? Did you get it all set? Good. Very good. Pension Committee today, it was a great report. There's a couple things that I took from that. The year return was around 10%. thought that was excellent. I would have never imagined that because we also are very conservative over there. The other thing that was mentioned, if I was right, was the allocation of international and domestic. It's a 70-30 domestic, 70 domestic, 30 international. I thought that was interesting. And I think they fully understand the severity of managing the money here for the future folks' benefits that have been promised to them. Yeah, that's important. I always worry about that. Any old business on the floor? Future business? Julius.
I don't know what this whole business now. You didn't mention anything about the VO bike.
Well, until the weather changes, right now the bikes are parked. There's few scooters and
Okay.
VO from the cities
Yeah.
with the snow removal. So until the weather breaks, we probably wouldn't see anything from VO until they're on their plans to bring that 3-wheel scooter here.
Because they were thinking about doing an experiment.
Yeah. Yeah.
Julius, we got you signed up for that lead person on that. You're already, Tony submitted your name. And Monty seconded it.
In the face of the 3-wheel scooter.
Okay, with that, motion for adjournment?